What's up, everyone? Welcome to episode 16 in my monthly series where I present to you my top 3 dividend stock picks of the month designed for income. If you're new to the channel, welcome aboard. This channel focuses on a long-term buy and hold income-focused investing strategy. The primary objective of this strategy is really to generate safe, consistent, and high passive income forever. So we achieve that goal by investing primarily in funds that hold blue chip stocks that use income enhancing strategies like cover calls in order to achieve that safe and high income. So this strategy enabled my wife and I to become financially independent or financially free in our mid-30s. So if we could do it, so can you. Keep in mind, we're Canadian, so most of the stocks and funds I talk about on this channel, including my stock picks, are listed on the Canadian stock market or the TSX, Toronto Stock Exchange. But since more and more of my viewers are from America or even outside of North America, I will make sure to include at least one out of the 3 stock picks, which is listed on the US stock market. So it will be the first one. And if you're Canadian, don't forget that you could avoid the 15% withholding tax on US dividends by keeping those stocks or funds in your RRSP account, your retirement account. So if you like my US listed stock pick, make sure to put it in an RRSP if you can. Also, don't forget, guys, to check out my previous monthly stock pick videos. If you're new to the channel or missed last month's video, most of the picks are still really good right now. And I have a specific YouTube playlist for my stock picks of the month, so it's very easy to find. So for the stock market summary this month, stock markets around the world are still at all-time highs. The economy is rolling post-pandemic, so everything is peachy, right? So should you keep investing irregularly, even though markets are at all-time highs? I know there's many rumors out there. Of course, rumors start, right? The correction is coming. It's inflated. It's a bubble. The answer is yes, and I covered this topic in the last video that I made a couple of days ago, so make sure to check it out if you missed it. Although it's definitely more difficult to find great deals out there, investing irregularly is key for all investing styles, in my opinion. It's what I was taught in high school, and it still holds true today. So I talk about it in that video. Make sure to check it out if you missed it. So the 4 criteria for my stock picks, same 4 criteria every single month. I own the stock myself because I talk the talk and walk the walk. Number 2, the stock must provide a consistent source of passive income, so a dividend or a distribution. Number 3, the dividend or distribution must be relatively safe and sustainable. And number 4, the stock or fund needs to have great values. I think if you invest regularly like I do, you should always try to see a good deal or what's undervalued out there, because something always is. So without further ado, here are my stock picks for the month of July 2021. All right, guys, pick number 1, my US listed stock pick. This one is listed on the New York Stock Exchange, is OPP. That is the stock symbol. It's the River North and Double Line Strategic Opportunity Fund. So the dividend payout is monthly. The annual dividend is $1, just a little over $1.90 per share. It is reset annually to 12.5% of the NAV. I'll talk about that in a second. So OPP is a multi-manager closed-end fund. So the managers are River North and Double Line, obviously, that are opportunistically invests in fixed income securities. So 65 to 90% is fixed income securities, and tactically invests in closed-end funds. That's 10 to 35% of the allocation. It does have a high management expense ratio of 2.7, but that's because it's a leveraged fund. So a leveraged fund just means that it uses margin. So when you invest in margin, you got to pay an interest rate, right? Well, fund managers they're not special. It's no different. So that's why the management fee is higher than normal for this fund. So here is a breakdown, guys, a nice little graph of basically what this fund does. So 10 to 35% of the fund is managed by River North. 65 to 90% of the fund is managed by Double Line, and you can actually see the current breakdown right now. So it's about 80% Double Line, which is the fixed income, and 21% closed-end fund income strategy, which is managed by River North. So you can actually see the breakdown. So what River North does, what they specialize in, is they invest in. It's a fund that invests in other closed-end funds. So they tactically invest in closed-end funds. That just means that, just like the second thing says here, the second point, it seeks to derive value from the discount and premium spreads associated with closed-end funds. So I've been talking about this a lot in my last picks, where a fund is trading either at a discount or at a premium. Well, these guys hunt closed-end funds that basically have discounts, that are trading at discounts. So it's really, really cool. And then on the other side, you have Double Line. Double Line focuses, or they're really an expert in fixed income. So you could see here, that's exactly what it says: seeks to generate risk-adjusted returns through investments in fixed income instruments. Primarily, guys, it's mortgages. So it's agency and non-agency residential MBS, mortgage-backed securities. So a lot of fixed income here, a little bit of stocks as well in that River North side, the tactical closed-end fund. So a really nice, cool split, very, very unique fund. I really, really like this one. The best part is the yield. So this fund has a really high yield of about 12.5%. And sorry, I forgot to mention it earlier, but the 1 year high, 1596, giving you 11.92%. Right now, it's at 1558, so you're getting a 12.21% yield. So this fund actually resets the dividend every single month. So whatever the NAV is, 12.5%. So right now it's at about that. It's always going to be at about, relative to 12, very close, sorry, to 12.5% yield. So really, really nice yield. So this is a unique fund. Like I said, it's managed by two advisors, two fund managers instead of one, River North and Double Line. So River North focuses or specialized in hunting down, or tactically hunting down, discounted closed-end funds, and Double Line is an expert with fixed income. So points and reasoning here: the fund is trading very close to NAV, so it is trading at a little premium. So what it's worth is actually a bit less than what it's trading for on the stock market, but it's less than a 2% premium, so it's really, really not bad. Very hard to find discounted closed-end funds in a bull market, right? So this is primarily fixed income securities, or primarily it's mortgages, and this fund does use a significant amount of leverage. Well, I don't know if it's that significant, 28.6%, not really so bad. So you have the entire breakdown here. As you could see, non-agency MBS and agency MBS, so mortgage-backed securities, make up the highest percentage. You also have some commercial real estate MBS here at 8%, as well as bank loans and corporate bonds, some U.S. government bonds, some BDCs, and some other stuff. But mostly it is mortgage-backed securities. This is a great fund also for Canadians as well to put in the RRSP. Like I mentioned in the intro, there's no 15% withholding tax on the distributions if you hold this fund in an RRSP. And it's also cool for Canadians because it's a unique fund. These types of leveraged fixed income funds, I haven't found any in Canada, so it's a great way for us Canadians to diversify our portfolio with fixed income, but also getting that high yield thanks to that leverage. So this is pick number one, guys. Pick number two is, of course, shouldn't be a surprise to you. Once again, it's gold, CGXF. So this is Canadian listed, right? It's on the TSX. It's the CI Gold Plus Giants Covered Call ETF, managed by CI Global Asset Management. The dividend payout is quarterly. Right now, the annual dividend is $1.42 per share. Keep in mind that the dividend, or the distribution rather, varies quarterly. So this is the average. $1.42 is the average of the last four distributions. So the 1 year high, 1746. This was back when the market crashed in 2020. So we all know, right, when markets do bad, gold does well. So right now it's the opposite. So you see right now it's at 1158, much, much lower. So you're actually nabbing, I can't believe this, every time I see it, it makes me surprised, 12.26% dividend yield. So this ETF really holds only 15, but the biggest global precious metal producers and miners. So only the big guys. I'll show you the breakdown in a second. And how do they achieve 12.26%? Well, it's not a fraud or anything, guys. It's thanks to those covered calls. So CI First Asset, or CI Global Asset Management, I think they rebranded. They used to be called CI First Asset. They have a very unique covered call strategy. They only write covered calls on 25% of the portfolio. So 75% of the portfolio is capturing all the growth if the stocks within the fund grow. But they are aggressive cover calls. They're at the money covered call options, which I think works really, really good for sector specific funds. So my key points in reasoning: this is a great entry point for investors right now because we're in a bull market. Bull market equals precious metals, gold, commodities are all pretty much on sale. So only the biggest miners and producers are in this fund, guys. No juniors, so no small cap companies. As you could see here are the 15 stocks, and only the big guys. So Newmont, Royal Gold, Wheaton, of course Barrick is there, Yamana, B2B, Goldfield. So only the big guys in the world here. And another thing I want to talk about is that since this fund has big losses since inception, since it was created. So when this fund came out in 2011, it was $40 a share. And right now it's $11.50. So that might make a lot of people scared, but it doesn't scare me because there's a big advantage to that. So the advantage is that almost all the distributions that this fund gives is rock income. So it's not tax, it's return of capital. So why is it rock income? Well, because of the losses. Don't forget that losses can be carried forward indefinitely, guys. So what they do is they offset the call option premiums that they get because of those cover calls with those losses, because call option premiums, don't forget, are considered capital gains. So if they have capital losses, they offset those and it becomes rock income. So the rock income is not necessarily a bad thing. So of course, this fund is a hedge against inflation and future stock market crashes, right? When the next stock market correction or crash comes, this fund will do well, it will go up. So there's also growth potential there. And of course, the cover call strategy greatly enhances the yield, about 12%, which is absolutely incredible. And if you're American, if you like this type of fund, I have a perfect fund for you. It's GGN. That is the stock symbol. It's a very similar fund from GAMCO, managed by GAMCO. It's listed on the New York stock market. So it's perfect for you Canadians or people outside of North America that want to get precious metal producers and have covered call income. So that's exactly what GGN does. And the yield is approximately 9%. So that's a great alternative for you Americans out there. Pick number 3, guys, is EIT, the Canoe EIT Income Fund. I love this fund. It's TSX listed, of course. The fund manager is Canoe Financial. The dividend payout is monthly, and the annual dividend is $1.20 a share, or 10 cents a month. So this is one of Canada's largest closed-end funds. It's really designed, I love the objective, designed to maximize monthly distributions. When I see those 3 words together, I get very happy. And capital appreciation by investing in a broadly diversified portfolio of high quality stocks. Really, really nice description there. So the 1-year high is $12.50, which you would get 9.6. Right now it's about $12.03, so you would get just under 10%. So here is the complete breakdown of Canoe EIT. As you could see, it's pretty well diverse in terms of sector. It's very heavy on the financials and the energy because it does focus a little bit more on Canada. But you also have some great healthcare. You have materials in there, consumer products, industrials, a little bit of everything. A little bit low on the technology, but this fund actually focuses on dividend stocks, which in technology there's not many of. So that's why there's not much technology in here. And you could see the top, these are the top 25 companies in the fund right now, which makes up 77.4% of the fund. A lot of the funds you'll recognize. There's some really cool, what I like about it is that I don't like owning energy companies individually. I don't have that much energy. So this is a great way to kind of get a nice chunk in energy, but really they're really cool and good companies in Canada, which Canoe EIT has been a master at picking. Things like Tourmaline Oil Corp, Storm Resources, Topaz Energy. I didn't even know what Topaz Energy was. That ended up being a royalty energy company, which is great. When I hear royalty, I think of income. Arc Resources is another one. You also have great healthcare in here as well. So stuff outside Canada, because we have 0 healthcare companies. So in terms of healthcare, you have CVS Health, Bristol Myers, United Health, Anthem. So it's really an awesome breakdown here. You have a lot of diversification, which I absolutely love. So my key points and reasoning for this one, this is by far, I mentioned it during every portfolio unveil, my favorite Canadian income fund of all time. This is the OG of my portfolio, one of really the first income funds I ever owned. I owned this for many years now. No dividend misses since August 2009. That's a phenomenal achievement. There has been, and this is really the main reason why it's a pick of the month. This month, they had a recent share offering, which lowered the stock price, and it is actually trading at a small discount. So it's a typo there. I wrote and is not trading at a small discount. It is trading at a small discount, which is very rare in a bull market, right? So the actual NAV, or what a unit is actually worth, or what a share is actually worth, is $12.28, but on the market it's $12.03. So you're getting a discount. So this is an extremely good stock collection, like we saw in the previous slide, mostly blue chip dividend growth stocks with good diversification. So you have sector diversification like we saw, and region diversification. So it's like 55% Canada, 40% US, and then 5% international. So nice diversification there. Of course, 10% yield, and when you see 10% yield, think of it like a 10% interest rate. Canoe Financial is really an excellent and reputable company. This also is a very big fund, guys. It's a $1.5 billion market cap fund, so it's absolutely massive. Also, the distributions or the dividends are very tax efficient. They're mostly capital gains and return of capital. So that combination is taxed way better than regular eligible dividends. And if you're interested in this fund, I made a video specifically for this fund. Make sure to check it out. You could see the thumbnail there. So I recently made a video on this fund. I absolutely love it. Definitely one of my favorite funds of all time, and it makes up the bulk, or about 6% of my entire portfolio. So there you have it. So there you have it, guys. I hope you enjoyed my stock picks for this month. As always, please support us. Please support this channel by hitting that like button. It's free for you, and it helps the channel grow, so it's a win-win. Also, make sure to visit our website, guys, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate Dividend Passive Income Investing Package, which is all my years of research put in one product or sample portfolios. It's great for Canadians and Americans as well. So this is the second version. I'm working on version 3. Keep in mind that if you purchase it now, you will get lifetime updates. So when version 3 comes out, you will get it for free. Also, I do offer a one-on-one consultation service also on my website, right there on the homepage. If ever you want to discuss with me to help you answer all your questions, help you build a portfolio, modify an existing portfolio, transition your growth portfolio into an income portfolio. I've done over 100 consultations now. I absolutely love doing them. I've met all kinds of people, and it's really fun. However, I am booked up until August, so completely booked. Sorry about that, but I will let you guys know when the August calendar opens up. I'm trying to figure out a way so I could squeeze in more appointments, because I keep getting emails and requests where people want to have the one-on-one consultation. So I'm really honored and flattered, but I need to manage my time properly, so I can't just take a bunch of people. So I'll let you guys know as soon as the August calendar is open. Finally, guys, make sure you're subscribed so you don't miss out on my future content and community posts as well on passive income investing. I do a survey every single month to ask you guys, the viewers, to select what topic you want me to cover next. So all you need to do is be subscribed to be able to vote in that survey. We're also on social media. Follow us on Instagram. We got an Instagram, and also on Facebook. We have a Facebook group that keeps growing. We're at over 1,600 members, so we have a nice little community there. So make sure to join us there if you use those social media platforms. The mission of this channel, my mission, remains the same, guys. It's to help everyday working people to invest on their own, so they build their own stream of passive income, so they too could become financially independent and, of course, enhance their quality of life. So with that, take care, guys. Happy Canada Day. Stay safe, and see you next time.